This is part one of a 3-part series on how to trade and identify a trend. If you've been watching my recent videos, you know that we have been trading the Mogwai reversal strategy, and that strategy is absolutely phenomenal. I love it. You can get some big wins out of this strategy, and it is so simple. However, people still struggle with identifying a trend and a pullback. So I thought I would do a 3-part series on how to master it, how to get the perfect entry point, and then ride with the trend and absolutely milk the market. So enjoy today's video. Today's video is sponsored by Go Markets. Go Markets is a multi-award-winning broker who is regulated by the Financial Service Commission. Myself and the BD members have been using Go Markets for over 7 years now. They go above and beyond to support the BD community and their traders. They offer award-winning customer support, thousands of tradable products, and some of the lowest spreads in the industry. This is perfect if your style of trading is scalping like mine. If you're interested in signing up to Go Markets, please use the link in the description below. Thank you and enjoy today's video. So this video is all going to be about the theory side of trends, building the foundation so you can learn to identify and profit from trends in the market. Video 2 is going to be about putting it all together, showing you kind of what levels we should be buying and selling from to get the most pips we can. And then video 3 is going to be about managing those trades with the trend, introducing a trailing stop loss, riding the trend and getting the most amount of pips. To give you the example here, I took a trade earlier today on gold. Okay, it was a Mogwai reversal strategy. So to summarize, we're above the moving average, so we're looking for buys. We've got the Mogwai signal to confirm it's an uptrend. We've got our pullback in the market confirmed by the MACD going oversold. And then the TCA line has turned green. The TCA line, if I zoom in, is this line here. When it goes red, it's a downtrend. When it goes green, it's an uptrend. So we've had an uptrend, a pullback, a trend continuation confirmed by the TCA line, stop loss below the low. Okay, I had a 1 to 3 on this one here, but this trade, I mean, look, you can see here, this trade went to about a 1 to 5. And that is it. Nice little 3% made. Trading simple. That is it. It all needs to be simple. The key to success on the charts is keeping trading simple, because trading is all about having a mechanical set of rules that you religiously follow. Okay, and you have to follow it. And there's a fine margin between experience and a set of rules, because a lot of people will have a set of rules and then be like, I'm not going to take this trade based off experience or based off this candlestick or based off this price action pattern. Okay, if you do that, you are actually going against your own rules, okay, which is the worst thing you should have. To be profitable in trading, you need to have a set of rules that you can religiously follow and pass those set of rules to somebody else that they can simply understand. Okay, I've seen a lot of traders say that their trading is simple and their strategy is simple, and then when it comes to it, right, a trade will meet the rules and they won't take it. But like, why didn't you take the trade? It met the rules. And they'll be like, well, because why would you take the trade based off that candlestick pattern? And it's like, well, your set of rules didn't say that. Okay, so it's very important you keep trading simple. The set of rules that you have are simple, and you just repeat that process, and guess what? Trading becomes very profitable. So let's summarize. Okay, so basically any strategy that is having some kind of structure on your charts, whether that's a supply and demand zone, support and resistance zone, fair value gap, imbalance, trend, trend line, Fibonacci retracement level, whatever it is, if it has some kind of structural level on your chart, from an institutional level all the way to a, give me a sec here, all the way to a retail level, it is considered a counter trend strategy. So to give you an example here, if you are, let's say for example, looking for sells when price comes to this level, okay, as price comes into this level, this is a uptrend. Okay, price is trending up to this level here. So this would be considered a trade against the trend. Okay, if you sell here, it is against the trend because at the time it was in an uptrend. It's only when price bounces off it and starts going into a downtrend and then you sell here, this is a trend strategy. Okay, so can you see the difference? Anything where you have structure on your charts and your strategy says we want to buy and sell from these levels, they are against the trend because as price comes into these levels and you sell in the opposite direction, they are against the trend. Okay, trend trading is very, very profitable. It's very simple. It's just about identifying the buyers and sellers in the market. Okay, the market is only ever going to go three ways: uptrend like this here, okay, downtrend like this here, or sideways momentum like this here. Okay, it will only ever do that. Why it does that is not our concern. Our concern is being able to recognize these patterns so we can profit from them. Like I said about that trade on, that I took on gold. Give me a sec here. That trade that I took on gold here. Very simple. I identified the trend. I confirmed it with the arrow. I waited for the pullback. I then confirmed the trend continuation. I put my stop loss below the low. I went for a nice 1 to 2, 1 to 3, just to have a good risk reward ratio. Thank you very much. Winner, winner, chicken dinner. That is it. Okay. Now, this is where it gets a little bit complicated. Okay. So let's first of all identify a pullback and trend, okay? So let's use an uptrend for example, okay? As price goes up like this here, this will be an uptrend. Then price will pull back and then price will go into an uptrend and then a pullback and uptrend. And all along it is creating higher highs like this here and higher lows. Okay, so this is an uptrend. What it means is there are buyers in the market, okay? And let's think about this logically. If you bought here, okay, let's look at it on the charts. Let's look at it actually look at it with some candlesticks so you get a better understanding. Okay, so price trends down, price pulls back, price trends down, price pulls back. Okay, so let's look at it from this point here. Let's imagine you sold here and price is now here. What are you going to do? You're going to want to take profit, aren't you? You've made about 50 pips. You've made some money. You want to take profit. So pullbacks happen in the market when it's called price pulling back or price breathing or price having a space, okay? What it means is that everybody here has stopped selling the market because they're taking profit. If there's nobody selling now, what do you get? You get price pulling back, okay? So pullbacks happen simply because everybody has stopped buying and selling and they're selling their position off, okay? So when you see an uptrend like this here, everyone's going to want to take profit there because they bought here. Then price will pull back and then everyone will think, ooh, price is pulling back. Let's buy this trend again. So they buy here. It creates a higher high. There you go there. Now, you can only have a higher high or a higher low once the previous high or low has been broken. So to give an example here, if we mark up this chart here, we have a higher high. The higher high is here, okay? This is the low, okay? So low and high. A high will only be confirmed once it has been broken. So as you can see here, price has pulled back. Now price, when it's pulling back, has to be higher than the previous higher low. It has to be, okay? Again, this will only be confirmed once the higher high has been broken. So here, now the higher high has been broken, we have now identified the previous high and low, okay? So as price continues up like this here, okay, we don't know when this high is going to stop ever. We don't know that, okay? This high can continue all the way up, okay? Until it starts pulling back. Now this here, okay, becomes the pullback. So this will be the swing low. As long as this stays higher than the previous low there, then we are still in an uptrend. Okay, this high here does not be confirmed until we break it. And then again, this would become the previous high and the previous low. Swing high or swing low. Change of character, whatever you want to call it. Okay, it's basic principles of marking up highs and lows. So to give an example here, if we mark up the charts here, let's just look at it here. So as you can see here, we had, let me just try and find you a point in which we get a change of character, and then it's going to make a lot more sense for you. Okay, I'll try and find you here. Okay, here we go here. Right, hold on here, that's not the best. Here we go here, that's better. Okay, right, so let's mark it up here. Okay, trend up, pull back. Trend up, pull back. So, where is the previous high and low? Here. Okay, here. This is the previous high. Okay, now you see here, this becomes the low. Okay, if we stay above this low, then we are still in an uptrend. So, see how price starts going sideways and consolidating, and then it failed to go higher. You see that here? But in the grand scale of things, this is the previous high and low in this uptrend. Okay? Then price starts to come down here. Okay? Then it creates a low. Then it pulls back and it creates a lower high. Okay? But same again. This does not become the previous high or low until it's broken. Until it's broken, which is here, this now becomes the new low. Okay, so this here, as long as price stays below this high here, we are still going into a downtrend. Okay, price can do whatever it wants to do. It can do zigzagging, it can do circles, it can go up and down, it doesn't matter. As long as we stay lower than here, we are going down because this is the lower high. Okay, so always identify the previous low and high in the market. Makes sense, yeah? So if we go back to this chart here, hold on here. If I go back to this chart here, if I get rid of there and I go to that setup that I took with the binary destroyer, which was just there, and I just get rid of all the indicators on my chart. So let's hide this, and we'll hide the MACD as well. Okay, where's my hide? Here we go here. Right, okay, so as we can see here, okay, we were in a down. Have I got the moving average? Okay, no, I haven't. It's great. Okay, I'll explain to you about the moving average in a minute, but let's just focus on price. Okay, so same again. If I bring up my charts here, I'm going to make it black so you can see. Done. We'll make it white. So downtrend becomes the low, pull back, lower high. Again, this does not become the lower low or the lower high until it is broken. It gets broken there. Okay, it creates the lower low down here. As long as we stay below here, okay, we are still going down. Okay, so you can see here, it doesn't matter where you mark it up, it is still a downtrend. Okay, and that's the important part. Identifying the previous low and high will tell us where the market is going to head. Okay, now this is where it's going to get a little bit confusing, right? And I'm going to show you a very simple way of not getting confused. Okay, within trends, you're going to have micro trends. Okay, so to give an example here, this is a very good example, right? And this is sometimes where people are going to get massively confused. Okay, what you'll find with trends is you will get something like this. You will get a downtrend, and as price is trending down, it will do like this here, and then it will start pulling back like this here, and then it will start going down here, and then it might go up, and then it might come down, and it's just a complete mess like this here. I mean, how much of a mess is that? But in reality, okay, it is still a downtrend, okay, lower lows and lower highs. So the important part you need to understand from this video, which is going to be number one, is marking up the previous lows and highs. It's instantly going to tell you which way the market is heading. So if I just get rid of that here and we go to a blank chart here, and let's just look at gold, okay? What is gold doing? Let's mark up the major lows and the highs, not the little ones, because like I said, we can sit there all day and mark up the little pullbacks in the market. We have a high and we have a low. So at the minute, we are going sideways because this is the previous high and this is the previous low. It's going sideways, and it's actually been confirmed by the 200 moving average, which brings me on to why moving averages are so important to identifying trends. You massively make life simple just by adding a moving average to your chart. I can just give you an example here. I'm going to go back to the Mogwai strategy in a minute, just because it's going to make a lot more sense. But if I just add, hold on here, if I just bring up the binary destroyer, and let's just pick Euro USD, right? And I'll find you a setup, okay, that I took earlier, perhaps with the members, okay? I need to add the MACD, okay? Okay, here we go here, boom, okay, simple. Look, we're below the moving average, so we're looking for sells. Okay, so if we're looking for sells, what do we want to be? Below the moving average. So we have a Mogwai signal, which confirms the trend. We have a pullback in the market, and then we have a lower low, and then we have another pullback in the market just there. And then guess what? We have a lower low. Okay, so by using the indicators, I confirmed a trend down and a pullback. Now, if we get rid of the indicators and we just use price action, so let me just hide the indicators again, and I just use price action. Hold on, let me hide the MACD. Here we go there. And I just use the price action again. So again, let's just pretend that moving average isn't there. So what we have here is we have price consolidating, okay, because it's going sideways, okay? What we then have here is we have a low and we have a high. But again, this does not become a low and a lower high until it's broken, okay? So where does it get broken? It gets broken down, let me just get rid of that there. It gets broken here. So if I just mark it up there, so lower, low, lower, high. We then get broken of this level here. So just here, we get broken, and this now becomes the new low. When we see this new low here, we look at the previous low and high, and we know now just from price action that price is going into a downtrend, okay? So we would wait for the pullback, which happens here, and we sell with the trend. See that? Okay? And what happened on that particular occasion there? Hold on here. What happened on that particular occasion? We went down, and you know, just by using some price action, we could have, let me just add a, I don't know, there we go there. And pop this over here. How do I get rid of here? There we go there. Short position here, just by having here, okay, you could have put your stop loss below the high, okay, so you could have had maybe a 6 pip stop loss, 12 pip take profit. There you go there. Nice little 1 to 2 with the trend. This is trend trading at its finest, because not only, I mean, obviously when you include the binary destroyer, it makes it simpler. And that's not a, you know, that's not a sales pitch to get you to buy the binary destroyer. I'm just using it because it's a very good example. But if you just use the price action alone by marking up the previous highs and lows, okay, we identify the trend. So you see here, right, we're going sideways. Okay, you see how we're going sideways? The moving average tells me that instantly, within the second, bang, done. Moving average, sideways, it's a count, it's nothing, it's not a trend. If I mark up the previous highs and lows, okay, what we have here is we have the previous high, the previous low. Did any of these get broken? No, right? It hasn't been broken. So there is the low, there is the high, price is going sideways, okay? So rule number one, mark up the previous high and low. It's going to tell you which way the market's heading. You can cheat and use a moving average. That's fine, doesn't matter, okay? Keep trading simple, it's going to make life easy. Number two, okay, I'm going to end it there on number two, is what time frame do you mark up your trends? Because I see a lot of traders in YouTube videos where, especially the YouTube comments, and they talk about, which time frame do I mark up my support and resistance on? Which time frame do I mark up my fair value gap? I can't see a order block on the 1 minute time frame. Look at the 30 seconds. No, okay? Let me explain to you something. If you want the same results as me, listen to me, do what I say, and guess what? You'll get the same results. If you listen to other people, it's going to confuse, it's going to give massive confusion for you. Stick 10 beginners in a room and it's going to be complete and utter chaos, because one beginner is going to tell you to do this, the other beginner is going to tell you to do that, and you're not going to get any answers to your questions at all. You're just going to go around in circles. Someone's going to tell you to do this, somebody's going to tell you to do that, and you don't know what's going on, okay? Top tip, when you are marking up your trends or whatever, support and resistance, fair value gaps, imbalances, you pick one time frame and one time frame only, okay? If you don't see it on that time frame, you don't do anything else, hasn't met the rules. So rule number one will be, let's say for example, I identify trends on the 1 hour. If you don't see a trend on the 1 hour, you don't do anything else. You don't go searching for other time frames, because then you're searching for trades. You're trying to find a setup, which is the one thing you don't want to do, because you're chasing trades. Let the trades come to you. So choose a time frame, identify the trend on that time frame, and if you can't identify it, don't trade it. Not worth it. Don't go down to a lower time frame and try and find it there, because you're doing the chasing method and it's not good. You're just chasing trades. So to give you an example of how that can massively confuse you, if I just go to the 1 hour charts, here we go here. If I look at the 1 hour charts right now, if I got a trade open, give me a sec here. What was I saying? Okay, let's look at the 1 hour. Let's look at the 1 hour. Okay, let's bring up some naked charts. Okay, let's look at the daily. Okay, on the daily, what is price doing? Price is in a downtrend. How do we know it's a downtrend? Because we've marked up the previous low and high. So I'm going to make this black again. So see the previous low, see the previous high. There's the previous high and low before that one. It's clearly a downtrend. So on the 1 hour, on the daily, we're on a downtrend. Okay. However, if we were to go to the 1 hour charts, we are in an uptrend. Okay. Slightly uptrend. We're kind of consolidated. We're going sideways. Okay. We're going sideways because again, if we mark up the previous low, which is there, and the previous high, what is price doing? It is in a range. Okay, so at the minute, price is in a range on the 1 hour charts. Makes sense? If we go to the 15-minute chart or 5 minutes, what are we? We're in an uptrend consolidated. So now you confused yourself. The daily is telling me it's a downtrend. The 1 hour is telling me it's going sideways. The 5 minutes is telling me it's going sideways. And the 1 minute is telling me it's an uptrend. So what do? I'm confused. This is what I'm saying. You choose one time frame to mark up your trend. It doesn't matter what time frame that could be. It doesn't matter. Okay? You choose it, you stick at it, and that is it. Once you've identified the trend, go down to lower time frame. Do not anybody that says to you, right, if you go, right, I'm going to choose the 1 hour time frame to mark up my trends. Or I want to identify the trend on the 1 hour. If somebody then says, oh no, you need to look at the daily or the weekly or the monthly, it's going to massively confuse you because different time frames are going to tell you different things, right? Which is not where you want to be. You want to keep trading simple. So to give you an example here, right, I would look at the day. Well, to be honest, what I would do is I would add a 100 moving average. I mean, we'll do this on TradingView, okay? Let's just pick NZUSD. This is going to be an interesting one. Okay, so first of all, what's the moving average telling me? Instantly. Okay, moving average, when I find it, is Okay, we are basically, we're right at the moving average. So let me go to the 1 hour. Okay, 1 hour. Okay, so here we go here. Okay, so moving average on the 1 hour, we're in a downtrend. There you go, boom, done, downtrend. That's all I need to know. I'm looking for sales. I'm looking for sales. Okay, I'm going to mark up the previous low and high. Where is the previous low and high? This is when we'd go down to perhaps the 15-minute charts. We'd mark up the low and high. Okay, so the low and the high would be, if I just bring up my charts here again, I would mark up downtrend. I'll make it white so we can see. There we go there. We come down, we pull back, we come down. Great, we pull back here. Okay, this is where I would be looking for sales. Okay, so I'd be looking for sales at this level here. I then would scale it down even further from the 1 minute all the way, from the 15 minutes all the way to the 1 minute. And now we've closed below the moving average. I will looking for sales. Okay, there you go there. I will cover, but this is confusing what I've just showed you, but I will cover it in another video, part 2. But what I would normally do on the 5-minute time frame, okay, or the 15-minute time frame, what was it? Yeah, is I would load up my binary destroyer like this here. Okay, where's my MACD? Hold on, give me a sec here. Where's my MACD? There you go there. There you go there. Thank you very much. So now I've confirmed on the 1 hour chart. Was it the 1 hour, wasn't it? Yeah, on the 1 hour chart, was it? Let me just get, I've got a memory like a fish at the minute. There we go there. So downtrend on the 1 hour. Perfect. So looking for sales. Okay. So I know I'm looking for sales. I'm confirmed that. Okay. So I want the exact same now to happen on the 15. Okay. So downtrend. Where's the MACD crossed over? Oh, look, just here. So in realistically, what we've had, if I just bring it up here, okay, is we've had just here, we've had the downtrend. We've had the pullback just there. The MACD has gone overbought, so it's confirmed this. I didn't initially spot this because this is messy. This is really messy setup. But you can see why indicators now are playing a very important role. This is a good example because a lot of you lot that watch this video like to kind of believe that price action is king, which it is, but indicators also have their place in the charts. And this is a very good example because I've just by looking at the moving average, my Mogwai signals confirmed it's a downtrend. Okay, look at this. Sell with the trend. Okay, stop loss. We take a short position. As soon as the TCA line turns red, which confirmed a continuation of a downtrend, we'll put a stop loss, 15 pip stop loss. There we go there. Let's go with a 12 pip stop loss. What's the trade? 30 pips, 1 to 2. Done. Thank you very much. 1 to 2. Done. That is it. That is it. What we're going to do in part 2 is I didn't really want to bring up my binary destroyer because that's kind of cheating. What we're going to do in part 2 is we're going to do pure price action. Okay, we're going to learn to identify. What we're going to do is identify the trend on the higher time frame. We're going to pick a time frame, let's say the 1 hour. We'll then scale it down to the 1 or 5 minute. We're going to mark up the lower low and lower high, the previous low and lower high. We're going to wait for the 1 minute and the 5 minute or whatever, 1 or 5 minute to line up with the 1 hour. And then we're going to take a trade. Pure price action. So if the 1 hour's in a downtrend, we're going to wait for the 1 and 5 minute to line up to confirm that that too is also in a downtrend. And we're going to absolutely rinse it. Like this example here, the 1 hour confirmed it was a downtrend because of the moving average. We've then scaled it down to the 15 minutes. Even if I went to the 5 minute now, I'd get exactly the same setup. I'd just get it in a better price. So here, right, you see here? See here? So let me find the point on which we crossed over on the moving average there. Okay, so there you go there. The setup that I would take is this one just there. That's the only setup I would take. Okay, and look at the difference on this one here. Bang. Stop loss below the low. As soon as we close below the TCA line, which is just there, I'd put my stop loss of like 15 pips. Okay, and look how many pips we got on this one. Okay, even better. We would have got, what's that, a 1 to 4? There you go there. And even worse, even better, if I go from the 5 minute to the 1 minute, right, to the 1 minute, okay, this is going to be a little bit tricky on the 1 minute, but here we go right at the top here. As soon as we close below the TCA line, okay, which is going to be somewhere around here. Hello, hello, hello. There we go there. So we close below the TCA line, okay. We've had a trend down. We've had a pullback. The MACD's gone overbought to confirm it's a downtrend. We're below the moving average. You see how the 1 minute now has lined up perfectly with the 1 hour. And I'm not going to mark it up there, but look how much the pips you would have made. Look at it. Game changer. So yes, I hope you enjoyed that video. Part 2 will drop next week. My name's Jamie Palmer. Thank you for watching.